Thank you. Welcome to today's event, Proactive Tax Compliance, Strategies to Reduce Risk and Save Time from Avalara. I'm Action Industry Marketing Specialist Jason Naxted. Before we get going, a couple of points to make. Down at the bottom of your screen, you'll see some icons. From there, you can ask a question, review any of the resources we have attached to this, and get a hold of Action and Avalara to check out a demo of the fantastic Avalara product. Today's webinar will go over how your business can grow and, how we'll discuss how your business grows, so do the complexities of tax compliance, and how Avalara tax compliance solutions are the go-to for distribution leaders who need to ace their tax compliance game. Today's presenter is Christine Martin from Avalara. She's a senior sales partner solution consultant at Avalara, headquartered in Montana with over 25 years of dedicated experience in the safe and use tax domain. Christine's career began at an international hospitality company. Her professional journey includes pivotal roles such as senior tax manager at a Fortune 100 paper manufacturer and director of compliance for a leading telecommunications tax outsourcing provider. Without any further ado, Christine, you can take it away.
Thank you so much. Thanks for having us. We certainly appreciate the time. So what are we going to cover today? We are going to talk about this overview of the tax landscape here in the United States, some trends, updates, how to navigate the sales tax and the compliance part of sales tax. We're going to talk about the Avalara Compliance Suite, and we'll save some time at the end for Q&A. So let's get started. Think about the revenue that states get. And most people think of property tax as how states get their income, or income tax. But sales tax, with the exception of where I live in Montana, sales tax makes up, on average, almost 30% of state revenues. So that really becomes an important piece of how schools and roads and bridges are kept up, is this sales tax piece of things. So it's a really important part of every state government, with the exception of those like Montana that don't have a sales tax. And if we think about how this revenue is split out, think about this income tax piece, and then the percentage of state revenue that's derived from sales tax. Texas doesn't have an income tax, but they do have a sales tax that runs at about 8.25%, and property taxes. And just look at Texas. Florida's another one that doesn't have an income tax, a state income tax, but their sales tax revenues make up more than 50% of their income. So now imagine, how do they figure out who's paid the right amount of tax and what's taxable and what's not? Those things are really important for the states because it's what drives their state. And then we have to start thinking about all of these rates, all of these rules, all of these boundaries, and how things change. In 2023, there was over 11,000 tax rate change updates in the United States alone. And then that's just the rate piece of it. But then there's the taxability. How are things taxed? And then we saw 85,000 taxability changes in 2023. And states have started over the last 10 years or so with tax holidays. And you may think of tax holidays around back to school. There's a lot of back to school holidays where people that are buying clothes or backpacks or computers, things that kids are going to use when they go back to school, there were 98,000 sales tax holiday rule updates. And then there's the international component too, that is certainly not as onerous as we are here in the United States. But I mean, there's almost 7,000 updates outside the United States as well. And when I started my career, we did these things manually, but we had a staff of 12 people that did this manually, not something that's super scalable, right? How can you manage 11,000 tax rate changes in a year? How can you manage tax holidays without automating it? I mean, you've got to be able to figure out what's included in the tax holiday, when does the tax holiday start, when does it end, and then being able to make all of those changes, that really becomes difficult and onerous, and who's going to do it all? The timing of it really matters. And then insert South Dakota versus Wayfair. So the state of South Dakota, actually, let's take a step back. Nexus. this is what states looked at that required people to become taxpayers in their state. And Nexus, way back when, used to be that you had to have this physical connection to a state, whether that was employees, whether it was warehouses, some kind of location. And South Dakota kind of set things on fire where they said, hey, Wayfair, we noticed that you're selling a whole bunch of stuff into our state and you're not collecting tax from any of those sales. We think you've created a presence for yourself here, although it's not a physical presence. And Wayfair fought this. It made it all the way up to the US Supreme Court. And the Supreme Court justices ruled on this and said, absolutely, Wayfair has created an economic presence for themselves, and they should be collecting tax from all of their sales into South Dakota. Well, as you can imagine, the other states kind of jumped on this bandwagon as well. But it's this South Dakota versus Wayfair case that really changed how businesses do business in the United States. And it really added this complexity to what people were doing. So there's this Nexus challenge, if you will. Look at it from the old school way, right? Do you have people? Do you have property? Do you have inventory sitting out there? Do you have affiliates? And do you have economic nexus? We'll come back to the economic nexus piece. But I want to talk about the inventory locations, because this one, a lot of people forget about this when it comes to marketplaces. And I'm going to touch on Amazon, because Amazon has FBA, fulfilled by Amazon, FBA, or FBM, fulfilled by merchant. Well, FBA, when you participate in the Amazon FBA program, you're shipping your product that you still own into Amazon warehouses. And Amazon can move those products from warehouse to warehouse. And unless you're looking at Amazon Seller Central, you don't necessarily know where your products are. But the key thing about this fulfilled by Amazon is you still own that inventory. And because you own that inventory, it's giving you a physical presence in whatever state Amazon has decided to put it in. While Amazon may be collecting and remitting that tax on behalf of you as part of the marketplace, that also means that you've got a physical presence in a state, and you may be required to collect tax from your direct sales to your customers simply because you're participating in the Amazon FBA program. So that one, this inventory location, I just strongly encourage everyone, if they're selling through a marketplace and you still own this inventory, that you pay attention, go to Seller Central, whatever that dashboard is that these marketplaces have, pay attention to where your inventory is, because you may have to register and collect for your direct sales. But think about people that are going into a state and providing service for you, or contractors that are working on your behalf. Those things may be creating a presence for yourself as well. I usually tell people, hey, look at your payroll a couple times a year. I was always in the tax department, so I didn't know where we were hiring people. So try and make it a practice that you're looking at where you're hiring new employees, because that could give rise to nexus for you. But then this economic nexus piece really came about and flipped everything on its head, if you will. And it's this sales tax obligation nexus that can be created in so many ways. And we're going to kind of hound on this economic nexus piece, probably because it's the hardest. But a physical presence. I want you to think about your stores, where you have stores, where you have those warehouses, where you have employees, where that marketplace inventory is. But also think about affiliates, other people that are providing services on your behalf, people that are acting for you, but as themselves. These people that are putting themselves out to be you, maybe giving you this cause to register and begin to collect and remit tax. So paying attention to all of these triggers really becomes important, because the last thing that you want is to get caught not collecting tax. If we think about sales tax is a tax on the end consumer, not you as a business. That's consumer use tax, and a completely different conversation. Sales tax is passed on to the consumer. You as a business are just acting as an agent for the state, saying, hey, I collected $100, I'm going to pay you your $100. But if you don't collect it, it then becomes a cost to you, which then has an impact on your margins, has an impact on your profitability. And here's the complicated piece, is every state has different laws. Different, not just the taxability of things, but different nexus laws. So economic nexus came about. Remember I said that the Supreme Court justices said, yes, South Dakota, you can institute this economic nexus concept. As you can imagine, all of the states had rules. They had put together a whole bunch of stuff in preparation of this ruling from the Supreme Court. But it would be silly if every state enacted the same economic nexus laws. Some states look at $100,000 in sales gives you economic nexus in their state, or 200 transactions in their state, regardless of the total sales, that gives you economic nexus. Others say maybe it's a combination of both. Maybe it's the number of sales and the number of transactions. Others say, nope, it's only the number of taxable transactions in our state. So how do you exclude the exempt transactions in this as well? But there's 45 states within the United States and even cities in Alaska that have instituted these economic nexus rules. How the heck do you keep up with all of that? That is the tricky part. But again, no two states are exactly the same. So how do you determine whether or not you've got this obligation to collect and remit tax? Remember, that's that term nexus. And we put together a map for you to kind of give you this idea of what these states have considered economic nexus. Economic nexus is probably the hardest of all of these when it comes to determining your obligation to become a taxpayer. The physical piece, yes, I know I have employees. Yes, I know I have a store. Yes, I know I have inventory. The marketplace inventory piece becomes a little bit tricky, but it's this economic one that really is hard. So think about states that say, hey, $500,000 worth of sales, you've got an obligation to collect and remit tax on us. So this just gives you that visual clue to say, hey, not every state is the same. You should know the rules for all of these because there may be a state that comes knocking. And then that kind of gives rise to the question is, how do the states know that you've created this economic nexus? Well, sometimes it's because they're auditing one of your customers and they see a number of your invoices come through and they say, you know what, they've sold more than $100,000 into our state. We should put them on the audit list next. So when do states need more money? What do? Well, a lot of times when they need more money, they're going to hire more auditors. And what do those auditors do? They're not looking to help a taxpayer out and say, oh, you've overpaid, take this money back. They're looking to see what you didn't collect on, whether you're missing exemption certificates, whether you charge the wrong rate, whether you didn't charge the tax on something. So what we've seen over the years is that states are hiring more and more auditors. If we think about the state of California, California auditors are not just in the state of California. They have an office in Atlanta, Georgia. They've got an office up in the Washington, D.C. area. They've got an office in Florida. Florida, the state of Florida, has a sales tax audit division in Atlanta, Georgia as well. So they've hired representatives all around the country to make it easier to audit people. One of my friends was a Georgia auditor. And one of the crazy things that they were tasked with was they had to look at the local newspaper and see who was having a yard sale every week. And these state auditors went out to these people that had yard sales every week and said, where's your sales tax registration? And where's our sales tax that you've collected? Because these people weren't occasional sellers. If they were having a sale every single week, they were considered a retailer. So we're seeing this increase in the number of audits because states are hiring more audits because they're trying to recoup their revenue. Because again, what's making up at least 30% of their state income is sales tax. And these audits usually they can cover 4 years. Here's the important piece about audits though. Once you file a tax return, the statute of limitations starts running. And if the statute of limitations runs and it expires, they can't go back to that period. But if you never file a tax return, that statute of limitation may stay open forever. So now couple that with economic nexus. Maybe you reached economic nexus in 2020, but you've never filed a tax return. 10 years from now, a state could go back all the way to 2020 and say, hey, where's all of my tax that you should have collected? So kind of keep that in the back of your mind as well. So as businesses start to grow, the complexity becomes more of an issue, right? This tax obligation becomes an issue. Think about companies that are growing outside their home state. They're going to build a new store. They're going to build a new warehouse somewhere else. Now they've got to figure out, how is what I'm selling taxable in that state? But what if they decide to open up an internet store? And now they're reaching economic nexus. They're having to figure out, how is my stuff taxed all across the country and at what rate? That becomes hard. But we're also seeing people look at changing their channels of sales. People that typically were wholesale sales maybe now want to go direct to consumer. Well, how are they going to do that? Is it through a website? Is it through a store? Maybe they're going to do it through e-commerce. And all of those things have their challenges when it comes to identifying what's taxable, identifying the jurisdictions, and then the filing piece of it as well. And we're seeing more and more technology to help people with these challenges, whether it's an easy website that you can spin up real quickly and you can sell your products. You don't have to warehouse it. You're going to have it drop shipped to you. And then there's the use tax complexity. The bigger you are and the more states you're in, consumer use tax becomes an even bigger challenge. So growing your business really can put a strain on what you do with these taxes, how you manage the taxes, how you charge your customers tax, and how many people you need to be able to file these returns and manage all of these expectations. So a lot of companies that are being audited may owe unpaid taxes that they haven't collected from their customers. Remember, sales tax is on the end consumer. Really, the best way is to collect this from your customers, not have to pay it out of your pocket. But when those companies audit you and they find that you haven't paid that tax, now you owe penalty and interest on top of the tax you didn't collect from your customers. And if that audit was big enough, you may be targeted for the next audit. I worked for some really big companies when I was in industry, and we knew that every 4 years, every state was coming back. And they didn't come all at once. They were fairly staggered. But I worked for a telephone company, and one of our auditors came in and he was there for 2 years. When I got there, he had already been there for 2 years. And I said, come on, you got to wrap this up. You can't be here any longer. And he wrapped up his audit, and about 6 months later, I got a notice in the mail that he was coming back to audit again. So when he came the next time, I said, you can't stay for 2 more years. You got maybe a month to get this audit wrapped up. So sometimes these audits take an awful long time, and then they're ready to audit you for that next cycle because they don't want the statute of limitations to run out. But it really depends on how the audit goes, how big of a company you are, as that will determine whether or not you get audited a second time or even a third time. But it's really important to understand that compliance isn't optional. It's really the law. If you collect the tax, remember, you're collecting tax on behalf of the state. If you collect that tax, you cannot keep it. You have to report it. So it really is the law. It's not optional. If you've met these economic nexus thresholds, if you've met a nexus threshold, you're required to collect that tax. And then once you've collected it, you're required to report it as well. And it's really unavoidable. You may have a sales tax obligation in more than 45 states simply because of how you do business, all of those sales channels that you have. And we're seeing states becoming more and more aggressive to be able to collect the tax that they owe. I was talking with a prospect last week They've got a location in Alabama, which I kind of scratched my head. They had a location in Alabama, but they weren't registered in Alabama. But they got a knock on the door from an Alabama auditor. Apparently, this auditor was in the area. He was auditing somebody else, saw their name on the building, looked them up in the Alabama database, saw that they were not registered to be a taxpayer, and he showed up at their door. And 2 months later, he came back again to do an audit. They hadn't collected exemption certificates, they hadn't collected tax, and they were in a slight panic. What are we going to do? So auditors can just show up out of nowhere. When I worked for the hospitality company, we ran the gift shop at the Houston Space Center. And unbeknownst to the tax department, somebody thought it would be a great idea to have a catalog. And it had our name all over it, and it's a national brand. And in the order form, it says, if shipped to Texas, add sales tax. Well, an Indiana auditor happened to be on vacation in Texas, went to that Houston Space Center, got that catalog, and he's like, I know this company's in Indiana. He took that catalog back, went to his boss and said, we should audit these people. Indiana sends me a notice that they were going to audit us. And the first question that he asked me was, I want to see all of your sales from these catalog sales. Imagine me in the tax department. I said, what catalog sales? And he pulls out that catalog. And we spent an awful lot of time digging into what kind of sales we had for that catalog. And before long, a whole bunch of states were coming and asking about our catalog sales. So the states are super aggressive. They may find you just by chance. But this one happened to be that somebody was on vacation and found us. These sales tax rates constantly change. We've got a tool that you can actually look up rates. You can subscribe to rates. So every single month I get an email update of those rates, and it's always surprising to me how those rates are updated. But then there's new laws that are enacted as well. And there's some new things that were passed that didn't necessarily have to go out to vote. I think of the Minnesota retail delivery fee and the Colorado retail delivery fee. So we talked about how sales tax is a big revenue stream for states, but so is gas tax. Now, think about what happened during the pandemic. People stopped driving because they were home. More and more people are working from home now. So that means that gas tax revenue also goes down. So the states, Colorado and Minnesota both said, how do we recover this tax that we're not getting from gasoline taxes? I know, let's institute a retail delivery fee. Didn't have to go to the voters because who's going to vote to have a new tax? But this retail delivery fee in Colorado is anytime something is shipped into Colorado by vehicle, you owe this retail delivery fee. And there's some other things that can keep you from having to pay this. And the state of Minnesota sat back and watched it for the last few years and said, wow, they really got an awful lot of money. We should do the same thing. So July 1st of this year, Minnesota enacted the retail delivery fee as well. And it's for things that are delivered by motor vehicle in their state that's using their roads. They're now collecting this other fee. It's not a tax, it's a fee. But in Colorado, that fee may be subject to tax as well. So mistakes happen though, right? Especially if you're doing things manually, mistakes happen. Sometimes those mistakes can be fairly costly. I think about missing exemption certificates. Usually an auditor does a sample. If you've got a high number of exempt sales due to wholesale sales, sometimes they'll do a sample and then they come up with an error factor. That error factor could be fairly large. One of the other things that we're seeing outside the United States is this concept of e-invoicing, electronic invoicing. So when we file our tax returns with the states, it's just a number, right? The states are looking at, does the return mathematically calculate? Is it paid on time? Is it filed on time? Then the only way they know that you reported all of your sales is when they come in and audit you. So outside the United States, many governments are starting this electronic invoicing concept, where as you create these invoices, it goes through a service and the states can actually see every single one of your invoices. So they know what your VAT return should be. When you file that VAT return, they're comparing it to all of the sales that have come through this electronic invoicing and say, wait a minute, Something's missing here. So that's something that I think Germany is coming up at the beginning of the year with this electronic invoicing, but very interesting. I don't know if we'll ever see it here in the United States, but it's certainly picking up some steam outside the US. So if we think of just standard sales tax, not telecommunications taxes, not hospitality taxes, restaurant taxes, just this sales and consumers use tax, there's over 13,000 jurisdictions in the United States. If you've reached economic nexus all across the country, how the heck are you keeping track of all of those things? That's an awful lot. That's more than one person can handle. And then throw in the tax return piece of things. But 13,000 tax jurisdictions. If you were to add telecommunications in there, I would tell you that's going to double because there's so many local jurisdictions that have a telecommunications tax and hospitality taxes as well. I would probably double this number also. But what we've seen is there's still companies that are trying to do all of this stuff manually, a little bit scared of technology. They want to manually update rates. They want to manually prepare returns. They want to manually manage exemption certificates, and they're going to manually prepare for audits as well. I worked for a CIO that said, humans are bad, humans make mistakes. And what happens, I think about the returns. We had 12 people at the hospitality company that did nothing but tax returns every single month. I used to have to plan my vacation around the 10th through the 15th. I couldn't go on vacation that week because I had tax returns to do. Well, what happens when that person that's doing those tax returns gets sick or goes on vacation? Who's going to do it for them? So that's something to think about, this manual piece of things. Humans are bad, humans make mistakes. Who's doing the research? One of the things that I do internally with our folks is I talk about a day in the life of what people do without automation. And one of those examples that I give is this tax research. And I got a phone call saying, hey, we're going to buy an airplane. Where's the most advantageous place for us to put this airplane? And I was given some parameters. It's got to be able to get to the office within an hour, all of those things. But I had to research in 3 surrounding states, including our home state, what those obligations would be. And that took me a couple weeks to be able to do. I was doing Google searches. Don't have much confidence in the Google searches because there's old stuff and new stuff out there. Then you got to figure out which one you're looking at. But that was an awful lot of effort put into researching the taxability of a Learjet and a hangar. And manual, right? So we have talked with people and asked, what do people find most challenging? And what we've heard by far, 51% of the people that responded to this said that keeping up with all of these tax law changes is what's challenging. Imagine trying to keep up with these retail delivery fees or the taxability of something changing. How do you know unless you're subscribing to each state's website and every time there's a change, you get notification? But they're also finding, and not surprising, that managing nexus is difficult. Go back to economic nexus. How am I keeping track of economic nexus? I've got to run all of these reports. I've got to go to Seller Central to see where my product is. That is really complicated. But then we're also talking about, how am I managing exemption certificates? And again, I think about my time in industry when I worked for the hotel. 4 years later, I'd get an auditor that says, hey, can I see the exemption certificate on why you didn't charge them anything? And I'd call the hotel and I'm like, hey, do you remember that guy, that one guy that stayed for one night that you didn't charge tax? Yeah, I need that piece of paper that you got from him. And most times we couldn't find it. So managing these exemption certificates at a hotel level was complicated. Then I worked for a telephone company, and my first audit, I did the right thing. I walked into the room full of binders and full of certificates, and I spent a couple days looking for exemption certificates, but everybody had their way of filing those, and I just ended up calling the customer and asking them to send me a new one. There had to have been a better way. And I did the same thing when I worked for a paper manufacturer. Hey, I need to get this certificate. Let me just call the customer. It was an awful lot easier. So managing those things, forget about even getting new ones when they expire. I had a hard time keeping track of the ones that we already had. But then being able to do the tax calculations, not surprisingly, was complicated. And it's not just the multiplication. What's the value times the rate? I think about states like Florida. Florida has a tiered tax where the local tax applies up to $5,000. But if you've got a single invoice for a bicycle, one line is for the pedals, one line's for the handlebars, one line's for the tires. And when somebody gets it, they put all of these things together and it becomes a bicycle. Then Florida says, you don't have to look at each line, look at the entire invoice as a whole and apply that max tax at the county level. How do you do that? Tennessee kind of takes it to another extreme, and they have this tiered tax as well. There's local tax that applies on the first 1,600, then there's an additional state tax for the next 1,600, and then no local tax on anything above $3,200. I just don't know how people do this on their own. That is complicated. The remittance piece of it, to me, that's complicated, but nothing like everything else that we've talked about. Can I take these numbers and put them on a return? Absolutely, I can. But the complication for me with the filing piece is states like Florida that require large taxpayers to be prepayers. Florida doesn't make it super easy because they say, hey, there's 3 ways that you can calculate a prepayment. Whatever your prepayment is just has to be larger than the lowest one. Gosh, now I'm left to my own devices to figure out how much that should be. Where states like Illinois give you what those prepayments should be. But what if I don't get a letter from the state of Florida telling me that I'm required to make prepayments? I still have to know when I need to make prepayments. Just because you don't get the letter, the state still requires you to know your own business and that you need to make prepayments now. So that part of it is kind of complicated for me. There are some states like Florida, South Carolina specifically, that max the discounts that you can claim. The state of South Carolina says you can only claim a certain amount all year long in timely filing discounts. So somebody's got to be able to keep track of that as well. And then the other challenging piece relates to international. My brain is full of US tax law. The international piece to me seems super complicated. But when you talk to the people outside the United States, they're like, I don't know how you guys do it. That's really complicated. But how do you know what duties and fees and VAT needs to be applied? Think of triangulation is really hard over there. So that VAT piece of it, especially as we see companies try to become international, this VAT piece really plays into it. So the cost of a missing exemption certificate isn't just, hey, I don't have an exemption certificate. I'm being audited. The auditor comes in and says, hey, I want to see all of your sales during our audit period that were marked as exempt. And that auditor then says, okay, I'm going to look at every 7th transaction. I need you to pull that exemption certificate for me. And based on those results, he's going to say, hey, you've got an error factor of X amount. And he takes that error factor, multiplies it by the total exempt sales, and he comes up with what your assessment should have been. And that one exemption certificate could have cost you $43,000. So missing that one piece of paper could be a $43,000 piece of paper. So let's talk a little bit about how Avalara can help with that. We have ECM, Exemption Certificate Management. And I want you to think about this as an electronic filing cabinet on steroids. It's a place for you to take that one $43,000 piece of paper and put it into a filing cabinet. But we're not just going to store that image. I want to take the data off of those images. What customer is it for? What state is it for? What's the expiration period? When's it effective? And what's it for? And we take all of that data and we can apply that data to transactions that are coming in. You think about most accounting systems, I can go in and mark a customer as exempt. And usually it's a checkbox or there's a field where you can put in a taxpayer ID number. But really what happens when there's that field to put something in, it's just looking to see that it's not blank. I could type in this box, Mom makes great pie, And the system sees that that box is empty and it's going to exempt them, whether there's a piece of paper or not. And it also doesn't say what state it's for. You mark a customer as exempt, they're exempt forever and in every state. So the beauty of ECM is it's reducing your risk because it's only applying exemptions where you have backup documentation for. And it's driving some efficiency because you're not having to do what I did, which was call the hotel, call the customer, dig through a filing cabinet, call the plant. It becomes more efficient because all of these certificates are sitting in one place. But it's also improving customer satisfaction. I used to have customers that are like, oh my gosh, why are you calling me for this? I've already given this information to you, stop calling me. Or we've applied tax to a transaction and they're like, I gave you this exemption certificate, why didn't you update your system? So there's a customer satisfaction piece to having a process in place to manage exemption certificates. And to me, this tax compliance piece really is mission critical. You shouldn't be buying or selling anything without a process in place, because there is just nothing worse than having this come about and having to pay things that you weren't expecting. But this compliance strategy, a lot of them are very inefficient. So according to a survey that we did, more than 71% of people surveyed said that they agree or strongly agree that online sales tax requirements are complex and confusing, without a doubt. 61% believe that they are fully compliant with economic nexus laws or marketplace facilitator laws. That means 40% of the people aren't compliant. That's just amazing to think about, all of these businesses out here that maybe are just putting their head in the sand. So I want you to think about this in two lights, right? Your business, you've got customers. That's how you make money. You sell things, but you're also buying things from your vendors so that you can then turn around and sell something to your customers. And this is really where Avalara comes in, is we wanted to have something that can help not just with the sales to your customers, but on your purchases and your relationship with your vendors as well. So this is where we start with you in the middle. There's licenses and regulations that you need. In order for you to collect tax and then report that tax, you need to be registered. You may need other licenses for your businesses, a sign license, a fire alarm license, an elevator permit, whatever those may be. We created a solution to help you manage all of those licenses and those registrations. But we also realize that there's still 40% of companies that are not super confident in what they're doing. So we created a risk assessment. Hey, if you want some help, you're not sure if you're doing this right, Avalara, can you help us? We can absolutely do this risk assessment. And outside of this standard day-to-day transactional piece, we also realize that people have a need for property tax. So we created a solution to help with property tax as well. But let's focus on your customer side, your sales side of things, where you've got to calculate tax, you've got to collect exemption certificates, manage those exemption certificates, you need to file the returns, and there's also that international electronic e-invoicing piece as well. Well, we created some solutions to help you with all of that as well, whether that's tax research, which we can do the tax calculation, and that does the tax calculation, but it doesn't tell you the why. Our tax research tool is the why behind everything. Think about my example that I gave you with trying to research the taxability of a Learjet. I could have used a tax research tool that I could have very easily not spent 2 weeks looking up the taxability of the jet and the hangar. But we've also got item classification as well. So think about stores that sell all kinds of things, and they just don't even know how to identify what's taxable and what's not, what taxability code it's relating to. We can help with that. And cross-border shipping things outside the United States. When you're shipping things out there, every single one of those shipping documents requires you to indicate what it is that's in that package. And that HS code classification is really important. It may be that You're shipping something into a country that prohibits certain things. That HS code is going to be important. Maybe you forget the HS code on a package. That package may sit in customs in another country. Now you've got an angry customer because they're not getting their stuff. So this cross-border piece is really important for customer satisfaction, just for the turnaround of your product, and maybe even to get paid. But also, we've got this W-9 and 1099 piece as well. So I want to talk about some core products that we've got. We've got, on top of our tax research, item classification, cross-border, W-9s and 1099s, we also have these core products that are really where Avalara started, which is AvaTax, our tax calculation engine. Remember that tax calculation does the tax, it doesn't give you the why. That's where the tax research piece comes in. Our exemption certificate solution, being able to collect those certificates, and we give you multiple ways to collect those certificates from your customers, store them, and have them impact the tax calculation. If we think about those top two items, AvaTax and exemption certificates, they work hand in hand. AvaTax, as a transaction comes in, if there's no exemption certificate or it's expired, it will systematically apply tax, which is the perfect scenario. We're taking all of this tax that's been calculated and collected, and we're able to put it on those tax returns. And then we've got our e-invoicing and live reporting for those countries that have that mandate, that it goes through the process of validating those taxes. So that's a bit on the customer side. Let's talk about on the vendor side, where you're actually purchasing things from people. You're supposed to be validating that tax on those invoices from your vendors. Did they charge me the right tax? If not, you still owe that tax. You don't get it tax-free. So there's still that calculation of consumer use tax that needs to happen, and that calculation then turns into the remittance of it as well. But you also have to be able to receive electronic invoices, and we've created some solutions to help you with all of those things. To be able to categorize your products correctly so that you know how they're taxed, to be able to verify that your vendors have charged you the right amount of tax, and to be able to digitally collect and file tax forms. And let's break this down like we did on the sales tax side of things. There's this item classification of what it is that I'm purchasing so that I know how I should be paying tax. Research, tax research, I spent an awful lot of time both at hospitality and in manufacturing, looking up the taxability of our machinery, million-dollar pieces of machinery. How much tax do I need to pay on that? I need to create a budget and include the tax in there. Then there's the cross-border piece. I'm buying things internationally. What does that look like for me and what that costs me? But also think about the W-9s and the 1099s from a vendor perspective. Every single vendor that you set up in your accounting system, you should be getting a W-9 from. And you should be validating those taxpayer ID numbers. How do you do that? Where do you store them? You can certainly be penalized if somebody has access to those W-9s and does something nefarious with those documents. So you've got to have a place to store those W-9s that's secure. But then we're all coming up to this time right now. Is January is the time of the year that 1099s go out. What does that process look for you? We created a solution for that to help you. But let's go back and talk about our core products. We've got AvaTax for accounts payable that can help you look at all of those vendor bills. Did they charge you the right amount of tax? You need to be able to give exemption certificates to your vendors so they don't charge you tax, whether it's because you're manufacturing or that you're reselling it. We wanted to give you a way to issue exemption certificates to your vendors and then proactively issue them to your vendors as well, so they don't all of a sudden start charging you tax because a certificate has expired. We can take all of that consumer use tax combined with the sales tax and put those on tax returns as well. And then layer on top of that this electronic invoicing and live reporting outside the United States. And if we put this all together, we can kind of see this hierarchy of where Avalara fits in with your business. And if we start at the highest level, our core products, the tax engine, the exemption certificate management, the tax return reporting, and electronic invoicing. And underneath that, we've got these supporting products, whether that's tax research, item classification, cross borders with duties and fees, licenses and regulations, our property tax, the W-9 and 1099 piece. And then all of that really is supported by integrations. And it's those integrations that make us unique. We've got over 1,200 pre-built integrations. So if you're buying a company, they may be using a platform that's already connected to Avalara. So these integrations, whether it's ERP and accounting systems, CRM, e-commerce, marketplaces, billing and payment systems, there's most likely a chance we've got an integration for them. And then at the very base of this, we've got a set of professional services to help you, whether that's implementation, doing some training on how to use these products, supporting you in your use of these products, or doing these risk assessments, or the streamlined sales tax project, which we didn't get in, but that is another tool to help with compliance and reducing your cost. And you'll see an M on some of these things. We've got some managed services to help you with those as well. So we really can help you take care of all of these unaddressed nexus issues, whether that's voluntary disclosures. Maybe you've done a risk assessment and you say, oh my gosh, I should have been collecting for the last 4 years. What do I need to do? We've got a team that can help negotiate with the states to limit the look back period, limit the penalty that you may pay as well. We can help you with those registrations. We can do some back filings for you, but it really starts with those risk assessments. So we've come to the end of this presentation. We do have a survey. We would love to talk to you. If there's anything that you would like to hear, if you'd like to talk with us, please check one of these boxes. And we left some time here at the end to be able to answer any questions that you may have.
I think, Christine, you covered all the points that anyone's looking for today. I'm going to go ahead and take over. You can go ahead and check out this QR code from the people at Avalara. What's included? Guided Nexus questionnaire to complete at one's own pace. Once completed, you receive an in-depth analysis of economic and physical Nexus obligations within 3 days. You go ahead and scan the QR code with your mobile device for your custom link to get started today. Questions, you can schedule a meeting. Contact Rich Creech at rich.creech@avalara.com, or you can schedule a meeting with the Avalara team at that QR code as well, using your mobile device, if you will. Once again, thank you everyone for coming out today. A little bit about Aktion. We're the largest North American distribution partner, 25+ year gold partner, 2020 Infor Circle of Excellence partner, supporting over 700 Infor distribution customers, deep-rooted expertise in distribution, light manufacturing, warehouse operations, and e-commerce skills. Key industries: industrial, building materials, electrical, PHVAC, paper, Jansan, and food and beverage. Employs 225+ professionals to serve our customers, 24-hour Tier 1 hotline support, and full software support 8 a.m. Eastern to 5 p.m. Pacific. Our Aktion offerings: application consulting and managed services, network engineering, software engineering, website design and development in collaboration, cloud technologies, virtualization, security, CRM, web enablement, e-commerce, and auto-link products. We're also a CRN MSP 500 award winner for 2024, one of the top workplaces for 2024, and Accounting Today 2024 VAR 100. Thank you, Christine, and the Avalara team for coming today. Thank you, everyone, who attended today. We know your time is important, so we appreciate the time you took out of your day to attend this webinar. This will be sent to you. This is recorded. So if anything you think you may have missed, you'll receive a recording of that within 24 hours. And you can email Rich over at Avalara for any questions or set up a demo that you may have. Once again, I'm Jason Nackstead for Aktion Associates. Thank you, Christine. And everyone, we'll see you next time. Have a great day.
Thanks, Jason. Take care, everybody.